Hello and welcome to LAT's Weekly Market Insights. The prospect of increased US stimulus has been received positively by investors in recent months, sending Wall Street to a series of record highs. However, this week we have seen markets pause. The very force that has been pushing equities higher is starting to create inflation. Nervousness over the knock-on for stocks drove Wall Street on Thursday to its first three-day losing streak this year. Concerns over possible spikes in inflation and rising bond yields prompted a pullback in risk-driven assets. Now, as we come to the S&P chart, we can see that sell-off, we can see that three-day pullback here on the daily chart. It was driven and prompted here technically from a bearish engulfing formation forming up at this R2 monthly pivot point. Now, whilst we've seen an excellent corrective technical move pulling back towards this 4-hour support zone, we are hesitant to turn too bearish here in S&P. For now, we hold above the previous low from last week. If we can hold above that, certainly we are not bearish as of yet. But if potentially this 4-hour chart can go on to form a reversal pattern, such as a head and shoulders, and we see a break down below this 4-hour and daily support level and a break of the weekly lows, certainly that could open some further downside pressure. Other risk assets such as oil also felt this nervousness and prices lost steam, but it still hovered near early 2020 levels. Brent crude, international benchmark, fell 1.2% to just above $63 a barrel. Now, as we come across to the crude chart, we can see a very similar theme to the S&P 500. The weekly chart, whilst not closed out yet, is starting to show negativity as we create this shooting star formation. The daily chart presents itself very similar to the S&P index, forming a bearish engulfing candlestick pattern alongside finding resistance at this significant R3 monthly pivot point. The 4-hour charts did nothing but reinforce that sentiment as we created a shooting star and then saw this corrective move back down to what is the higher low on this 4-hour chart. Now, we popped our head down below there and form this hammer formation. We're now breaking through that level as we speak, and with not long to go now for this candle to close. This break and close below the higher low could open up some further weakness for oil. Demand previously driven by the disruptions in Texas oil supply is now being offset as the recommencing of Texas oil production and news that the White House was willing to negotiate with Iran over a return to nuclear deal, a move that could pave the way for a rise in the country's crude exports. All eyes to see this weekly chart to see if we can see some more negativity or if this daily bullish uptrend is going to continue. As we look to Europe, the IHS Market Flash German Purchasing Managers Index for manufacturing surged to a 3-year high of 60.6, up from 57.1 in January, according to the data published on Friday. This data supporting the marginal lift we are seeing in the indice markets this morning. In contrast to that, however, the German services PMI fell to a 9-month low of 45.9, down from 46.7 in the previous month. Eurozone business expectations grew more optimistic in February, with sentiment regarding output in the year ahead rising to the highest since March of 2018, thanks to hopes of successful COVID-19 vaccine rollouts in the coming months. Now, whilst the DAX remains under pressure, similar to the S&P 500, this positive data has given the euro a boost. So we can see on the weekly chart this bullish uptrend that has been in play here for a long time now. We failed and bounced back and showed positivity at the 50% retracement level. As we look then to the daily charts this week, what we have seen is a corrective move, a pullback towards the 61% Fibonacci retracement, where we also find our moving averages before seeing a continuation and an aggressive bounce back from that 61 level. As we dive into the smaller time frames, we can see support coming in here from that 61% fib and also that S1 weekly pivot point. So buy opportunities came in earlier in the week to take euro dollar long. We saw a hesitation at that weekly pivot point before a clean break this morning off the back of that positive sentiment has taken this market through in continuation. The daily here at the moment suggesting a potential inverse head and shoulders, which would lead to the continuation of this weekly uptrend and perhaps a look towards the highs up at the 123.50 region. An excellent technical chart, some clean, impulsive moves here, driven by some positive data through the economic calendar. And as we look to other news unrelated to trading, but a significant moment in history, NASA's Perseverance has landed on Mars, sending back some amazing footage, some amazing shots to us late on yesterday afternoon. The most sophisticated vehicle sent from Earth to the Red Planet has landed successfully, and for the next 2 years, the car-sized vehicle will search for signs of life, launch a helicopter, and prepare the way for human visits. An amazing headline to end the week, some clean moves in the markets. I wish all of you a brilliant weekend, and we'll be back with you same time next week.